Hello, everybody. This is Dr. Fraud Michael Skiba here. I'd like to welcome you to episode 8 of DFTV, WTF, I have to say that slow, What the Fraud series. And I am joined by special guest, Charles Amodio, who I'm going to introduce in a minute. So really excited that you are here today because we're going to be talking about an awesome topic, a topic that I grew up with, and that is the case of Crazy Eddie. So Charles and I are going to go back in time. We're doing like a Throwback Wednesday, and we're going to investigate this case, kind of pick it apart from a fraud and forensic accounting perspective. And definitely, as always, one of the things I always try to start with is please engage with us in the chat. Now, one thing I noticed last week, one of you guys brought this to my attention, that the chat is delayed. What I'm seeing is a little bit behind when you guys actually post. Okay, so if I don't respond right away, please don't take offense. It's just a matter that it's not showing up in the feed. So I have a couple workarounds I'm going to work on today through my iPad and my phone. So keep chatting in. I'm going to monitor those more diligently, and that way we can engage in you on maybe a more timely basis. Okay, so this episode is really, really exciting. But before we actually get in there, I'd like to introduce our special guest. So we have Mr. Charles Amodio. Charles Amodio is CPA, forensic extraordinaire. I don't know who else I would rather investigate this case with than Charles. So quick bio on Mr. Amodio. So Charles has over 20 years experience as a forensic accountant. He is a certified public accountant, a master analyst in financial forensic, and is certified in financial forensics. He is a partner with FAS Forensics, also known as Ferraro, Amodio, and Zarecki. And he specialized in areas of insurance loss accounting, economic damage analysis, litigation support, and financial investigations. You can also see Charles on the speaking circuit. He regularly supports a lot of the industry groups talking about fraud, all things non-fraud, and anything having to do in the accounting space. So, Charles, thank you very much for joining. Great to have you here this morning.
Thank you for having me, Mike. Appreciate it.
Fantastic. So, Charles, let's talk a little bit. I want to, kind of throw out some disturbing statistics first before we really kind of dive into this very interesting case. And, it's very timely for us because we just talked about this. You and I just were introduced to Crazy Eddie kind of growing up. So we saw these commercials. So it's kind of, something that's new to us, if you will. So let's talk about some stats because this is really disturbing. So when we talk about, corporate fraud, and that is, employee fraud, employees committing fraud against their corporations. One of the most interesting things that I think I've come across in research shows that only about 4% of those people have a prior conviction. Okay, so you and I both know this, that the fraudsters, we kind of bucket them in two different categories. The opportunistic fraudster, where it kind of falls across their lap. They're not looking for fraud. But then there's also the contrived fraudster, the one that's organized, maybe, kind of has a strategic plan. So what's interesting I find about that statistic, though, is that, companies do a good job, hiring these people. But, 4% have a prior conviction. I mean, such a small number, and it's interesting because out of that, over 85% usually show signs of some sort of red flag. They show some indicator that the fraud is precipitating, but it usually goes on average about a year and a half. So anywhere around 16, 18 months. So I find that just so disturbing, on how these frauds can just go on, for so long, if you will. So let's dive into the case of Crazy Eddie here for a minute. So just to give a high-level overview, and then we're going to start digging around in here. So Crazy Eddie, of course, the electronic superstore of the 60s, 70s, partially in the 80s. So this was a family business, and we're going to talk about actually some of the details on the fraud that they precipitated. But in the end, they ended up defrauding over $80 million. Through doing some, different types of creative accounting work. Actually, they fled to Israel, which is where they were found. They were indicted on, I believe it was 17 federal charges after that. So pretty big case, defrauded stockholders of a lot of money. So again, let's start to dive into this a little bit, Charles, as far as what the case was actually about. So it started off. I mean, some of the highlights of the case. Crazy Eddie started working as a stock boy. Right, he started working as a stock boy within this company, and what he realized very quickly was that I would say creative accounting practices were part of their strategy. So he found out early on that they were involved in some cash skimming, type of scenario. So can you talk to us a little bit about that? Cash skimming related to this case, but more even on a global basis. What do you see from your space? How does it relate? How does it relate to this case?
Well, I think the problem with Crazy Eddie in this particular situation, him starting as a stock boy, I mean, the culture of the company was probably the biggest issue. I mean, obviously, starting as a stock boy and coming in and basically, the culture of, skimming off the, skimming cash and things like that. I mean, obviously that led to obviously bigger and better things for him and trying to steal more money and things of that nature. So, that was probably the biggest issue, I think, for him and obviously led to, all the problems that Crazy Eddie had, going forward.
So, I mean, do you think, it's so important you mentioned this, you talk about the culture of an organization, especially, I mean, he was young, but this could be also translated to any new employee per se, right? I mean, yes. Any new employee coming into that new culture, I mean, it could be the same, almost identical company on paper. It could be an insurance company, a bank, a division, department, right? But the culture could be entirely different. I mean, I experienced that as well, right? You transfer to a different department, you feel like you went to a whole different company, because that culture is entirely different. So, in your experience, I mean, in the cases that you've actually investigated, you see that as a theme going through, is that culture that surrounds whoever's precipitating the fraud.
Yeah, I mean, I think you want a culture of integrity. I mean, that's first and foremost. I mean, within any organization, and obviously, that was not present at Crazy Eddie from the get-go. But with any organization, you want a culture of integrity, and essentially, whether it's within a working group, a department, a work area, whatever it may be. Obviously, certain work areas and work groups, and obviously areas of finance are going to have a different impact on financials than maybe production or some of the other facets of a company and stuff like that. So it really depending on where you are within the company, you definitely want to see a high level of integrity, but the culture within those groups is you'd like to see a similar type of culture, and that all starts at the top, obviously, right, with the CEO and leadership. So obviously it trickles down to to all facets of any organization.
And how hard, I mean, as far as cash skimming itself, how hard from a accounting perspective is that to actually prove? I mean, is it something that's it's very labor intensive, requires interviews, or do you rely on the numbers, basically trying to follow the numbers around? I mean, how does it? Well,
I mean, there's got to be some level of collusion within the company, and so when you're doing interview, like you mentioned, interviews, when you're doing company interviews and stuff like that, and when you're doing audits and things of that nature, I mean, there needs to be some level of collusion. I think in most of the cases that I've worked on, where there's been some level of cash skimming, things of that nature, somebody has always come to the forefront. Mm-hmm. Somebody has always come to the forefront. There was some collusion going on, but somebody else has always come to the forefront to say, hey, listen, something's going on here. There's some kind of cash skimming going on. There's some kind of a fraud going on here. I know it. And that's when we get brought in, and obviously, we go into an investigation, and then there's definitely some cash skimming going on. So, but there's usually some level of collusion going on, and that's how they were able to hide it for years. And I think the case specifically talks about, the one individual that they sent to college, and they paid for his college, and he became the CFO, and helped him, basically helped him with their schemes and stuff like that. So obviously, very, very important part of that case.
Right. That was part of their business strategy. I should say their fraudulent strategy was to educate Crazy Eddie, so they could actually learn the ropes, if you will, from a legitimate, learn what the legitimate process is for counting, and then understand what the parameters could be.
Yep.
And I mean, the thing is too. And I see we have some chats coming in. Good. So I think the IT gnome is nowhere to be found today. So perfect. So Richard, thank you for chiming in. Richard says, I remember the commercials. The prices were insane. Yeah, it's.
Yeah.
I do recall as well. It was almost. They always say if it's too good to be true, right? It probably is. And we actually, Charles and I were chatting about that before, about how. The commercials were just, they were kind of, in your face, I guess you will. I don't know, very dynamic for the times. I mean, now you might not even, think twice, but at that time they kind of jumped out at you. But I guess that was part of their marketing plan. But when we talk about the skimming, it's interesting because when you talk about underreporting, income in relation to that. So when you're underreporting income, I mean, what are some of the flags that we would look for? I mean, obviously, looking to verify number of employees per, I mean, is there any kind of specific, I don't want to say formula, if you will, but, revenue versus, I mean, what would be the biggest one to look at for a non-accountant, let's say?
Well, I mean, you're looking, I guess, you're looking at relationships between revenues and expenses, cost of goods sold, as you mentioned, employees. I mean, and obviously they were paying employees off the books too, which kind of throws, those percentages out of whack as well. But the fact of the matter is, I mean, you want to look at those, those indicators, year over year, and whether or not those are those are in line. You want to look at it against the industry and how they're operating against the industry, and look at some industry statistics. I mean, that's usually a common indicator. I mean, if they're operating in a situation where they're so much better than the industry, I mean, how are they doing it? I mean, some companies are better than others, and you get that, but are they that much better than others? You know what I mean? I mean, they're selling electronics. It's not like they're selling a something that is so great that it's it's proprietary, and it warrants a higher level of income and profitability per se. They're selling electronics. And so everybody was selling electronics. I mean, obviously they were marketing, and their commercials were as you mentioned, in your face and things like that. But at the end of the day, they're selling a product, very similar products to other electronic companies, and you got to look how they were doing against the industry.
Right. And it's interesting too, because when you think of the employees themselves, I know they paid a lot of them, off the books. They paid them cash, so they were avoiding those payroll taxes. And I mean, you think about it from an employee perspective. And I remember, back, when we were 14, when you're mowing lawns, I mean, it was great. You had cash, right? They gave you $20. It was off the books. Like, fantastic. But I remember the first job I got, on the books, and I was like, wait, I earned that $20, but I'm only coming home with 10. It was kind of like, wow, this is kind of interesting. So, these employees are probably thinking, wow, this is great. We're getting paid off the books. I mean, we know very well how improper, illegal, and et cetera, that is. But These employees, I mean, it's all about just what's in their space, taking that home. So to them, that's enticing. They're like, wow, these guys are, this is great. They can make more here, like you said. I mean, as selling electronic sales, than going to a competitor, because they're getting paid off the book. So they're happier.
That's right.
So, happy employees, we know, I mean, it just generates a whole different dynamic. So, interesting. It's a very interesting, perspective that way.
Yes.
Now, when you talk about, okay, so evading payroll taxes, I mean, as far as, okay, where it goes past that, okay, obviously where you sit, you're helping the companies, you're helping, your clients actually find it. How about the next step past that as far as prosecuting? I mean, what do you see from that space, specific to, let's say, evading payroll taxes? I mean, is it something in that space that's prosecuted by the IRS, or is it something that depends on threshold?
Yeah, I mean, I think thresholds are a big issue in my experience. I mean, I think like anything, the IRS or any state state agency would want to recoup and recover any payroll taxes that are owed. So that being said, if depending on the amounts, obviously you're talking about a pretty sizable chain here of electronic stores. So that obviously going to be a very big number. So if you're looking at any organization that's got something similar, yeah, they're gonna want to go after companies like this and recoup those payroll taxes, without a doubt. And yeah, that if they're not gonna pay those payroll taxes, those back taxes, obviously there's going to be penalties and interest, and that's going to obviously further increase the overall damages there, and they can't pay them. I mean, obviously they're going to be prosecuted for that. So it's obviously for your larger companies, it's going to be very, very substantial. And obviously, you go back to the fact that Crazy Eddie was doing this back in the 70s and maybe even the early 80s. Probably, in my estimation, probably wasn't as big of a deal back then as it is now. Obviously there's so many different, now companies are really on board with trying to pay people on the books, and you have these payroll companies now that are helping you keep things straight with your payroll and all that good stuff. So very, very important there. But at the end of the day, if you're not going to stay on top of your payroll taxes and pay employees on the books, the IRS and a state government agency are going to come after you and try to collect their payroll taxes that are due.
And it's funny because I think of the parallels with insurance fraud. Let's say, okay, so insurance claims fraud, and we see areas. I just saw some research. An agency out in California, they actually kind of embarked on a very aggressive prosecutorial environment, and they actually saw a reduction of about 20% in fraudulent submissions. So we know that it works in just in the property casualty space, and accounting space, same thing. I mean, we know trying to prosecute at the federal level, starting small, is very difficult. I mean, you have to work up through through certain organizations to get to that point. So we find that there's if there's no deterrent effect, then it's seen as a very low risk, high reward type of crime. Where I mean this case was different. That I mean this was a good result even during the times.
Right.
So hopefully this was a good example. Good example of that. And I think what's interesting too is when we talk about actually how the bigger so that was we were kind of growing from the skimming, the evasion of the payroll and things like that. But I guess the bigger picture was the when the inflation of the stock price. So how did and this is where the stockholders, of course, they purchased all the stock, and then of course they realized that it really wasn't worth what it was. So kind of like almost legitimized the stock price by adjusting the accounting principles. So do you see that as a flag? All of a sudden you see inflation of profits, and you see payroll just spiking and things like that. I mean, are those all flags that there's definitely suspicious activity going on?
I mean, it should have been.
Yeah, right.
I mean, it should have been. Yeah. I mean, without a doubt. I mean, if you see, I mean, I guess the thing from a forensic accounting perspective is that, I guess the word I like to use, or the phrase I like to use, is like the intellectual curiosity. I mean, if you see certain trends and then you see a different set of trends, wouldn't you want to like look at those and investigate those trends? I think the big thing with Crazy Eddie, they almost like tried to go like legitimate prior to going public. Tried to shore up their books a little bit, and that's exactly what they did. But nobody, that should have raised a red flag. It didn't. But this was really going back. I think obviously going back into the late 70s, early 80s. These types of things weren't as prevalent as they probably are now. Right. This type of manipulation, where people, companies would do these types of things. I'm sure there was going on, but not to this extent, per se. I also think that now it's so much more it's so much more prevalent with the media. It's so much more prevalent with just because of everything is the news is so much more in your face, and you hear about everything now. Nothing gets past the news, and any kind of a situation like this is always up in front. So yeah, I mean, I just think it's something that should have been detected, but it just wasn't on the radar,
right,
like it is now.
And I think what's for us too, one of the things that even through all the training, everything that I do, one of the things I always say is, in fraud especially, and you keyed on it before too, look for anomalies, right? Look for those things out there. It doesn't matter what area of fraud you're in, even phishing scams, I mean, look at those times where the CEO is normally logged on. If emails are coming outside after that, okay, that's a flag. So any anomaly, doesn't matter what space you're in, is so important. What's the norm? And you do it from a manual basis, electronic basis. I mean, depending on what tools you have, but it's so important, because at the end of the day, I mean, it's still all about, fraud's all about human behavior, right? I mean, it's all, and we're all, we all have certain profiles. We all have certain times and certain ways we do things as a individual, as a corporation, a department. So looking for anything outside of that norm is is critical. So I want to talk on a little bit about expense accounts, because this is one thing that, I mean, all of us, I think everyone probably listening to this has some overlap with expense accounts, right? And I mean, I think it's such an interesting area, because it's almost like it's acceptable to add certain things on an expense account. I mean, the fact that you take a per diem but don't actually spend any of the money. I mean, things like this, I mean, they're padded in to an expense payment. So I mean, from our perspective, it's disturbing, because we know where that leads to. So talk to that a little bit, about what your experience is with how that could potentially grow into something bigger.
Well, I mean, I think what happens there is that if you can get away, if an individual is padding their expense account and they see they can get away with a few $100s here, a few $100s there, and they're able to to do that on a regular basis, and then they start getting a little bit more greedy, and they start that number goes up a little bit, and they start looking for other areas within a company where they can potentially embezzle or steal some additional monies and stuff like that. And that's what that's what ends up happening. I mean, so it starts little, and they get a little bit more courageous, get a little more greedy, and the numbers start going up. And whether it's it starts with an expense account, and maybe leads to something else, and that's generally what happens. Expense accounts are tricky. I mean, I think depending on the size of the company, it may be a small segment of your overall expenses, and do you want to spend a lot of time having somebody oversee that part of it, and really spending a lot of time monitoring that? I mean, to some extent you should. Obviously you need to be able to document your expenses, obviously, and things of that nature. but depending on the relationship between those expenses and the overall size of your company, it may not warrant that level of scrutiny. But you have people in your company that may start off small and maybe stealing money from you left and right, and maybe that's an acceptable level of fraud at a company. Okay, well, we were losing X amount of dollars a year, and that's okay because our bottom line is this, and maybe that's okay. But at the end of the day, it's happening and may lead to something else down the road. And is that and that's part of the culture at a company. Is that okay? You need to put controls in place, and that's it kind of goes back to some accounting controls and things like that. Controls in place to combat that. And what can you do to detect that? What can you do to prevent people from or employees from padding their expense accounts? You need to have those systems in control, systems in place to do that. And do you want to spend the time to do that? So it becomes really a cost benefit analysis, really, depending on the size of the company. Smaller companies, I mean, you have the time to be able to do that. Obviously, if you see one individual that's their expense accounts are going through the roof, and obviously you have a very small expense budget. I mean, obviously you're going to want to investigate.
Right.
Larger companies, you may not see it. I mean, companies that multi-million-dollar companies, that increase in expense is irrelevant. It's immaterial.
Mm-hmm. Right. So, and we couple that back, Charles. I mean, what we talked about first, 4% don't have a prior conviction. So this ties right into that psychology behind that. The little padding. And then that grows, and they see an opportunity, and then it's reward, right? It's risk and reward. Pavlov, right? If you're rewarded and you're not punished, you're going to probably still engage in that. We see that every day in spaces. So that psychology behind that is absolutely critical.
And it goes back to the whole fraud triangle. The opportunities there, and there may be some financial pressures and. By whether individuals got a gambling problem, they're going through a divorce, or a drug problem, or whatever it is, they got some kind of a financial issue going on, and then they start rationalizing, well, I've been here 10 years, I've been doing a great job, I got a 3% raise this year, and you know what, so the company's not going to be missing this money, and I'm due this money anyway, so it's part of my expenses. That's my expense account. It's my expense account, So that's the rationalization part of it. So it really goes back to that fraud, that whole concept of the fraud triangle.
Right. The justification, huge. I mean, we see that. Yeah. I mean, in the criminal justice space, I mean, it's a huge, there's a lot of theories, criminological theories based specifically on that. How justification makes people still feel good about engaging in a legitimate activity. So it's a huge part of it. Now, Charles, I know we should have booked more time for this because there's so many things to talk about. But I want to thank we had a couple of people in the chat. Mario Pecoraro, CEO of Alliance, chimed in. Who doesn't remember Crazy Eddie? Yeah. Now, my question to you, Mario: did you actually get duped? Did you buy anything from him? So that'd be my first question. Maybe did you buy any stock too? Alice too, thank you, wonderful insights, great insights. So thank you, Alice, for chiming in. So Charles, I guess to wrap this up, we see, I think one of the themes for me that also grabbed from you was, you have to have those systems in control. I mean, what happened back then with Crazy Eddie is different now. We have a lot of cool tools to use. We have people, i.e. accounting firms that can help with this. We have on a manual basis, we have solutions, electronic data solutions that can help identify anomalies. But what we know is that a lot of these situations start small, they grow big. So companies, individuals, they can put those protocols, put those things in place, the code of conducts, and all of those lead from above. I mean, those things are so critical at every single level of an organization, from C-suite, operational. It's critical. So yeah, it was fun kind of analyzing And Mario comments he was too young, so I think he's dating us, Charles. So we'll have to follow up with him on that one.
He's not that young. Come on.
Right. This is true. So Charles, a couple of final questions for you. First off, what are you seeing to our audience? The big trends right now, in accounting fraud. Like, what are you working on? Mainly right now.
It's yeah, I think you see a lot of the I think you see a lot of it in a lot of the shareholder disputes.
Yeah.
I see a lot of those. You see a lot of two individuals own a business. One shareholder is running the day-to-day. The other shareholder's absentee, and so the individual that's doing the day-to-day is suspected of taking more money and doing things that he or she shouldn't be doing. Seeing a lot of that, more and more. Because they have access to it. They have the opportunity. They're working the business more, so they kind of have the rationalization, and whether or not they have the pressure, maybe another situation, maybe they're going through a divorce or other financial hardship. So, kind of goes back to that fraud triangle again.
Right, the opportunity. Yeah, we see that too. When you're given, even promotions, or we had a big case we're working on where it seemed like there was a direct pattern when someone moved into a position where they were managing a lot of the vendors. That just opens up so many opportunities with these vendors for kickbacks, and it's just unbelievable how every person that seemed to move in that position just had a higher propensity to engage in some quote unquote creative behavior. So again, it's the environmental factors and that opportunity that can push that. So I see a couple comments with Dave Brandt, friend of mine, actually worked for Crazy Eddie. Thanks for chiming in, Dave. Eric Rodriguez, Rockstar Eric. I remember that case. Guess I'm not that young. All right, so Eric, you're a member of our club, so the Experience Club, right? Very nice. So Charles, I always like to end on this one. So fun fact about Charles Amodio that nobody knows.
Fun fact about me. Let's see. I don't have any fun facts. I don't know. I'll say this: if you meet me in person and you talk to me on my right side, I'm deaf in my right ear, so I'm not ignoring you. Okay, that's probably the only fun fact. I don't know if that's a fun fact. That's just a fact, I guess. I don't know.
Good to know. So all these years, I didn't know that. See that?
You didn't know that? Oh, I thought you knew that. Okay, you probably thought I was ignoring you, Mike.
I thought you were ignoring me all these years, Charles.
Oh,
now I know. I feel good right now. I thought I was kind of like I really liked me half the time when I was.
All right. Okay. All right. Yeah. So
very nice, Charles. Listen, thank you for your time, the insights. Great chatting with you. If anyone needs to reach you, where can we find you, Charles?
My email address is cmodio@fazcpas.com, or you can call me on my direct line at 518-288-2142.
Very good. And Charles and I are all over social media. Charles is on LinkedIn and as well as myself. So to everyone that chimed in live, thank you. Thanks for the comments. Really, really appreciate it. We love chatting and engaging. Please send me ideas for future episodes. We're booking months ahead, so I definitely want to have enough really strong topics from you in the queue. And again, engage with us after. If you're viewing this after, please connect with us directly. You have Charles' information. You can get a hold of me on LinkedIn too. So thank you, everyone. This is Dr. Fraud and Charles. Have a great afternoon, and definitely keep in touch.
You too, Mike. Thank you.